We are seeing some interesting dynamics now that there are quite a few attempts at creating closed loop networks using stablecoins. How do you see it playing out in the market?
It's about trying to find that right balance, right, between the speed, the security, the accessibility as well, what makes sense of the use case. And so far, I think that's also what's partially behind the advent of a number of these different networks that you're seeing as well, right? So all of which have slightly different nuances, I would say, and all of which likely have a different target audience in mind, right? And I'm really keen to see how, looking agnostic of chain, looking agnostic as well of a particular token or other, how we can actually build inherently within a network this notion of compliance, this notion of standards and requirements around the participants of that network, and also a sense of incentivization, right? Of why would you get involved in the network in the first place, right? And how it's not just one entity at the end of the day that can create this. It really does take a village, right, to come together and set the standard of what does this look like, right? And what does good look like? And how can we enable value transfer at scale, right, beyond any given company?
Hi, everyone. Welcome to another episode of Stack Chats. I'm Pelle Braendgaard, the CEO and one of the co-founders of Notabene. We help companies manage and implement crypto transactions and stablecoin payments safely and in an open network. I'm joined here today by Anoosh from Zodia. Please, Anoosh, please introduce yourself.
Absolutely, and thank you so much for having me. Really pleased to have this discussion today as part of this forum. I'm Anoosh. I'm the Chief Product Officer over at Zodia Custody. We are, as the name suggests on the tin, right, we're a digital asset custodian and infrastructure provider owned by a consortium of financial institutions. So really glad to take this space and have this discussion today.
Excellent. Thanks, Anoosh. So maybe one thing to get started, I think there's sometimes some confusion, like what's the difference between a custodial service and, let's say, a wallet provider? What is it that you add on top of that?
Really good question. And I feel like over time as well, the lines of this and the expectations of this have also blurred over the past few years. So if you think about a wallet provider, right, they provide the really crucial function of key management services. Now, as a custodian, there are additional requirements that are placed upon you. Key management is critical. I'd say that's one of the most important components of being a custodian or providing wallet services. But over and beyond that, the expectations of a custodian are also reporting, accounting services, insurance on top of that, the policy layer and the engine and the governance over how the wallet is actually accessed, by which users. Are they registered? Are they not? The process as well of essentially going beyond wallet services and thinking about how does this enable a user to be able to trade on a given venue? How does this allow a user to be able to delegate assets as collateral, again, to a particular lender or to another borrower, etc.? So all of this, I would say, if you think about a custodian, we take the great work that wallet providers do. I think they're very complementary in nature. Different use cases meet different requirements, but being a custodian, if I can put it in a nutshell, it's not for the faint-hearted. It's a capital-intensive, resource-intensive, and cost-intensive business. But at the end of the day, it's part of the foundational infrastructure of the digital assets ecosystem.
Oh, excellent. I mean, that explained a few things for me as well here on that front. You know, you were, as you mentioned, you were really created through several banks working together who had this particular need. So since Zodia was founded, have you seen kind of the institutional ecosystem change?
Yeah, great question. So since we were founded, and believe it or not, we were founded off of the idea, this is going back in 2015, 2016, it was a project related to transaction signing for banking. And over then, as you can imagine, that turned out to be a really critical component as part of crypto asset custody or digital asset custody. And if I think about what's changed over the course of the past couple of years, I would say, in terms of the client base that we interact with, in the past, if I can say pre-2025, it was heavily digitally asset familiar or digitally asset native. And over time, I'd say the big catalyst this year has been obviously looking at the US stance towards digital assets and the more proactive measures they're taken to essentially have regulation in place, the spur that's had on other jurisdictions as well globally. I'd say we've seen much more, going to your question, much more of a catalyst or much more of an acceleration of traditional financial institutions getting involved in the space. I think I read, in fact, that as part of every major bank, whether it's tier 1 to tier 3 banks, essentially there is an expectation that digital asset strategy is there and submitted to the board committees, right? There has to be a strategy in place, and there has to be, regardless of the timelines, an idea of how that's going to be tackled. So that those are the themes and the trends that we've seen with respect to the FI space.
That's very exciting. Yeah, we're seeing similar things on our side where we are. At the beginning, it was just actually a few surprising banks who came in and started using us, but it's much wider right now. It's very exciting to see. Probably many of the same banks, I'm guessing as well.
Absolutely.
What about stablecoin adoption? We often talk a lot about that in this industry and using crypto for payments. And as background, I don't know, probably never told you this, but I got into crypto originally because Bitcoin would be perfect for payments, wouldn't it? Except it wasn't actually really that good for payments. But that was what got me into it many years ago. But stablecoins are here now, and they're taking off, at really crazy numbers, as we can see in our own internal numbers as well. Yeah, how's that changing the business from your point of view?
Absolutely. I think it's that the stablecoins have really found a product market fit, especially within the course of the past 12 or so months, I would say, and in particular the last 6 months, right? And especially with the advent of regulation, or the rollout rather of regulation in a number of jurisdictions as well that we've seen. I would say it has really blossomed in the sense that you're seeing a number of use case driven examples of, for example, trade finance. Beyond that as well, cross-border payments, B2B payments, right? You're really seeing those industries and those use cases, particularly when it involves payment service providers, actually getting involved in the space, understanding how do they service this, right? How do they create this end-to-end linkage that essentially, at the end of the day, delivers value to the end user, whoever the end user is, right? From the point in time of, being able to essentially transact from fiat to crypto, right, to a stablecoin, and then beyond that, a stablecoin transfer of value, and then vice versa on the other side as well. I think this is where essentially our two worlds, as we know it, are converging and colliding, which at the end of the day, I think is only going to bring more efficiencies, right? I don't think stablecoins are going to absolutely erase any other form of value transfer. I don't think that's quite the case. But what I think it will do is add a really, really important and complementary value opportunity here to the industry that's much needed.
Yeah, that's a great point. And also, since you're also working a lot with banks, are you also seeing things like tokenized deposits? Like seems to be the counter to stable coins. I think for most people, it's the same kind of thing. I don't behind the scenes it's different, of course, but are you seeing a lot of interest in that as well? Or?
We are indeed. And again, as you said, right, as I think at the end of the day, what's really important is the structure of these, the claim. What does it mean in terms of who's the issuer, right? What is the claim of the asset holder of said token, right? And what does it mean? How freely transferable is that asset or not in some cases, right? And I think it goes back down to what is the use case that's trying to be solved, right? Is it intended to be closed loop within the barriers or the confines of a given institution, which is a perfectly valid use case, or is it meant to be beyond that, right? And more of an open ecosystem that's also at the same time compliant, goes through the same rigorous standards that you've been supporting on your side with Notabene as well, and the same with Zodia, the standards that we're expected to comply with, and our clients are also expected to comply with as well. So I would say it's very much it's an ongoing challenge that I think everyone is trying to. I think we'll see it over the course of the next 12 months as well. You're seeing a number of L1 chains that are being created, right? And specifically looking at stablecoins and looking at how those can be optimized, right? So it really is, it really is one of those areas where there is so much happening in this space, and it's really exciting to be a part of.
Yeah, absolutely. And like you mentioned, the difference between closed and open loop, and I'm very much a believer in open loop networks. Of course, closed loop can have their use cases as they also do in traditional payments. And maybe just for reference, I can just define for people not aware of the terms, like a closed loop network would be a closed network, like I forget the name of. This probably needs to be cut. A closed loop network would be you sending money to someone within a bank, and an open loop would be like Swift transaction or a stablecoin transaction, meaning you can send to anyone within the network. There's no gatekeeper who's controlling who can be part of it. Now, strictly speaking, there are gatekeepers in Swift and Visa and MasterCard, but they're so large that from a de facto point of view, they are open loop. Now, we are seeing some interesting dynamics now that there are quite a few attempts at creating closed loop networks on using stablecoins as well. And how do you see that playing out from institutions? I mean, I can imagine it feels safer for some institutions, right? But how do you see it playing out in the market?
It does, right? And I think it's about trying to find that right balance, right, between the speed, the security, the accessibility as well, what makes sense of the use case. And so far, I think that's also what's partially behind the advent of a number of these different networks that you're seeing as well, right? So all of which have slightly different nuances, I would say, and all of which likely have a different target audience in mind, right? And I'm really a proponent of looking at, if we think about the various different stable coins, of course, the majority of them, don't quote me on the statistic, but I believe it's over a significantly high 90% of stable coins which are USD denominated, right? How long is that going to continue? And again, just trying to have a little bit of an understanding of the different use cases there for non-USD denominated tokens, right, or stable coins. And I'm really keen to see how, looking agnostic of chain, looking agnostic as well of a particular token or other, how we can actually build inherently within a network this notion of compliance, this notion of standards and requirements around the participants of that network, and also a sense of incentivization, right, of why would you get involved in the network in the first place, right? And how it's not just one entity at the end of the day that can create this. It really does take if I can say, a village, right, to come together and set the standard of what does this look like, right? And what does good look like, and how can we enable value transfer at scale, right, beyond any given company, I would say.
I mean, that is exactly what I also feel very passionate about. I think one interesting thing with so much flow being in US dollar stablecoins right now, some of it is a little bit, at least this is a thesis, so bear me out on this. My thesis is that a lot of this is because for trading use cases, you need a common form of liquidity, right? Because you need as much liquidity as possible. But for payment use cases, you still need liquidity, but you need efficient liquidity, and there may be more efficiency, probably, to having more direct pairs between, let's say, a euro-denominated stablecoin and a Mexican peso-denominated stablecoin that they don't always by default have to go through a US dollar-denominated stablecoin. I think we're going to see some exciting movements on that front.
Couldn't agree more. And again, it will be really interesting to see how wholesale FX markets move on chain. Do they move on chain? Do they move at the speed? At what speed do they move? Right. And then how will this develop over time as well? Obviously, retail use cases being really important as well, but looking at the more wholesale side as well, and seeing how does that translate to global finance, right? How do banks and market makers change their models to try and essentially at the end of the day cater to these completely different use cases as well? I'll be there sitting with popcorn, waiting to see what happens, and ready alongside to provide the plumbing that the industry needs.
Excellent. Well, so are we, for sure.
Of course.
So, I mean, Notabene, we were founded like 5 years ago to build a Swift-like network to solve FATF's recommendation 16, aka the travel rule, and we saw this as being a key missing aspect of crypto transactions. With this large, arguably the best settlement network the world has ever seen, we still need some private messaging and being able to understand who the counterparts are in a transaction. So we're seeing that's changing a lot in the industry as well, and having compliant participants, like Zodia, be part of that. We see this as also being a really big part of just growing the overall volume of kind of real world transaction volume. Like, how are you guys looking at compliance as a differentiator?
Funny you say that, right? Because I think back to, again, when we started, so very much of the same DNA that you've just spoken about, right? And the reason for your finding and the crucial role that you also play in terms of value transfer and in the industry as well, and what an unlock Notabene has been. But as you said, right, the way we were thought about, even going back to our design approach of how our custody solution was created, right? The first and foremost threat vectors that we were trying to essentially cater for as we thought about how do you sign a transaction, right, to enable movement from wallet A to wallet B, it was all built around the fact of there must be no interaction by a Zodia employee. How can we also enable that there is no obfuscation of this signing transaction, right, by an external party? And how do we build in place the mechanisms that essentially at the end of the day prove that it is the person that is instructing the transaction that is really the one that is then subsequently pushing that intent to sign the transaction as well. So this is all part of our design. It was how we were built, right, from the ground up, just thinking about how we enable movement of assets, right, or record the movement of assets on chain. And it's really interesting to see how having that security by design approach or compliance by design approach has just essentially been a fundamental part of how we've begun and how we've set ourselves up. And very similarly, right, when we have the likes of the partnerships that we have between us and how we also bring together the right participants from across the ecosystem, right, and we really work together to higher the standards, right? That's also behind the big push behind more and more institutions getting involved in the space, and in fact driving changes and the positive changes that the industry needs.
Excellent. Yeah, and I think it's also interesting that and great that by stablecoins being open and crypto blockchains being open, there's space for highly regulated participants like you guys, and there's also still space for DeFi, self-hosted wallets, ledgers, etc., etc. And I believe strongly there has to be this kind of duality. It's not one or the other.
Or the other.
Yeah, it has to be both, really.
Couldn't agree more.
So how, like for custody providers, do you see that as a network business in yourself, as a closed network, or are you more interested in open networks where you're providing, services to your customers that are able to allow them to transact where they want to be?
Yeah, it's a really good question, right? And I think this is where it ties into your previous comment, right? Because as a custodian, right, which is different from a wallet provider, as a custodian, of course we have to comply with travel requirements. Of course, there is also a case of internal risk appetite, which can vary by jurisdiction, right, in terms of what you can allow clients or users to do or not do, and how they can interact with various different apps on various different ecosystems as well, right? So what I'd say is, for us, we have to have the perfect balance of, like you said, we need to know all of the counterparts. And I say counterparts in its fullest sense, whether that's other entities, whether that's dApps, right? If you think about it that way, whether that's other venues, liquidity sources, exchanges, etc., that our clients are interacting with. We need to know that. We need to assess them as part of our own requirements, right? But what we do enable is, for those given participants, right, a way to interact with them and to interact with them in a safe manner, right? And this is where, again, going back to your point, I think there is an opportunity here for custodians, for wallet providers, for all of us to come together here and have a common way of essentially connecting to one another, right? Rather than having it very bilateral, as is the case today, right, where it's very much a one-to-one type of integration or relationship, actually enabling these connectivity sources, right, where you have a many-to-many interaction, and you can essentially gain comfort that between, let's say, a wallet provider and a custodian, that there is a level of scrutiny and there's a level of review that's gone through, and in fact, there's multiple sources of defense, right, in terms of control over things like financial crime issues, or in terms of blockchain tracing, or some of the other tooling that's available as well, right? And it's all about how we can find the right jigsaw puzzle at the end of the day that gives users the freedom to interact with innovative ideas, innovative concepts on chain, but also do that in a manner that at the end of the day provides some sense of security, right? And also gives a sense of, I'd say, autonomy to the user. So it's about balancing a few different things together there and trying to provide as much value as possible safely.
That makes a lot of sense. There's a lot of, like we talked a little bit about it before, there's a lot of new blockchains coming up, particularly dealing with payments, such as Tempo from Stripe, Arc from Circle, and Stable from Tether, which is also, this is very interesting. There's been a lot of debate around that, but there's also some very interesting institutional chains that have come out also over the last year or so, such as Canton, and I believe you guys are also working with Canton on certain aspects there. And I find it very interesting that all of these different special purpose chains are being created right now, and all of them seem to attempt to solve real problems. What's your view on that at the moment?
It's like you said, right? It's an exciting time to be in this space. And I actually think back to circa, if my memory is serving me right here, circa 4 years ago, where Facebook tried to do this, right, as part of their Libra Diem project. And in fact, Zodia were a part of that as well at its during its progress and creation. And I mean, you can argue it was too soon for its time. You can argue right solution, wrong timing, right? And as we think about it, right, as a infrastructure provider, as part of the plumbing, right, of the ecosystem, we have to support a variety of chains, right? We are the ones that have to abstract away, right? And I'm sure that you're in the same position as well, right? We have to abstract away all of these different options and these different mechanisms. And we need to find the right integrations, right, with the right chains that bring different unique selling points, right? And different sources of value for, at the end of the day, end users. And we need to come together and essentially create the right foundations that make things simple for the end users, whether simple is equal to private, whether simple is equal to cheaper, whether simple is equal to more efficient in terms of timing and settlement speed. That's what we're there for. So I wouldn't say that we support any given chain. As a custodian, we are chain agnostic, right? But we can definitely see some sources of value from all of the chains that you've mentioned. And in particular, you're seeing Canton specifically booming of late, because again, it's found a really important pain point in the industry, and it's managed to find a way to get the right players involved and really basically use it and make sure that the use cases there are also in line with those three principles, right? Privacy, scalability, and at the same time as well, maintaining that compliant nature, which we're all here for, right?
Absolutely. I also, as a not really recovering computer nerd, but as a real computer nerd, I also appreciate with Canton that someone's taken a very different approach to
absolutely
different architecture. I think that's great, and I think people shouldn't be so scared of doing that. So I think they've done a great job on that.
I love that you've said that as well, right? Because I feel like a lot of the time, sometimes we go to the drawing board and our initial sense is to completely, reinvent the wheel or, look at things in a completely different manner. Whereas actually there's a lot to be said just in terms of what are the main pain points and what is the best way of solving those pain points and essentially getting buy-in, right? From a number of users that you want to use that. So I think it's been a really interesting story there and some really good progress being made. Excellent.
So here we're coming somewhat close towards the end here. I wanted to maybe focus on the future, on 3 years ahead. Everyone talks about programmable money, crypto stable coins taking over everything being decentralized. Where do you see, not Zodia necessarily, but you, Anoosh, where do you see the industry going in the next 3 years?
Yeah, I love that question, right? And I think a lot of it also hinges on, if I think in terms of the retail space, I think, as you'll see, that the pace of change, it will only increase. And we've seen in the past 6 months how quickly things have gone, and all of these different use cases and new chains and new tokens being created left, right, and center. Right? I think that will only continue, and the speed of innovation will really go over and beyond anything we've seen before. And on the wholesale space, I think we really need some support here in terms of how we look at the level of penalization of financial institutions, right, and holding crypto on balance sheet, and what that means from a penalty perspective in terms of capital, right, and then those allocations. And I think those are some of the key things that still need to be solved for, right, and perhaps the risks of banks being involved in that and essentially the disincentive that they have versus the rise of PSPs, which now almost become quasi-banking institutions, right? And crypto exchanges as well. And you kind of think, well, what's the best way? And when I look at this, I think, well, what's the best way that you get these different sources, these different ecosystem participants who have very different profiles, and they all have, again, really different use cases and sources of value that are undeniable, that it's just a case of how does this fit together at a macro level? And what does that look like in 3 years, right? Will we see crypto exchanges overtake the more traditional exchanges that we've grown to the node. Perhaps, right? Perhaps that's where we see things, almost reverse takeovers, right? Or perhaps you'll see the scale and the capital that we know today, right, from the largest financial institutions in the world. Perhaps they'll see this really good opportunity, right, and decide that this is the moment to essentially seize it. So, what can I say? I'm genuinely really intrigued to see what will happen in the next 3 years. What I know for certain is that I'm going to have to buckle up. I think we all will buckle up, hold on tight, because it's going to be a really, really fun ride.
Absolutely. I mean, I like the way you position those two. I'm sure we'll see like a wide mix between all the different use cases. Like I've been involved with payment protocols for a long time, and I always used to say that the PSPs kind of appeared because banks couldn't figure out how to innovate, right? And most people I know in banks would absolutely agree with that, with that part of it. But as the PSPs, as you pointed out, are becoming quasi banks now, I'm hearing more and more banks that are saying, "Okay, we're ready now. We actually want to compete now," and so that's exciting. It's exciting to see people move forward, and I actually, in some respects, I see a lot more innovation coming out from people within banks, things that aren't public yet, but very exciting to see a lot of the things that are happening right now.
Absolutely.
Yeah.
So we better buckle up and get ready, because the innovation is coming, and it's coming at a speed that, quite frankly, I don't think we've seen before.
Yeah, exactly. I think also, like, you often hear people say that banks can't innovate because of core banking systems written in the 70s or 80s. I don't know. I think something's going to happen in that over the next 5 years, because they're going to have to do it to survive, right? And I know there hasn't been enough reason in the last 20, 30 years to rewrite these old COBOL monstrosities. And they also need regulators to come along to be able to do that. But I think something's going to happen very, very soon and quickly. And we've seen it, frankly, before, like in telecoms, which moved completely onto IP, right? 20 years ago. And no one thought that was ever going to happen. So interesting time.
It is. And you throw in as well, to your point, it's not going to be an overnight thing, that I think all of these incremental changes happening over the course of, like you said, I'm thinking as well within the 5 to 8 year horizon, before we know it, the advent as well of AI, right? That speeds things up massively. And you think about interoperability, right? And what that means. And it's really in all senses of the word, right? Chain-wise, systems-wise, right? With old banking systems, old ways of value transfer, how that interacts on chain between, like I said earlier, removing these bilateral connectivity points and instead having this network effect, right? I think there's so much opportunity, and again, that's why we're here, right? We're here to create those connectivity points and essentially create those foundations.
Excellent, Anoosh. Well, thank you so much for today. I'm really looking forward to Notabene and Zodia working together over the next 3 years during this exciting period.
The gold rush, absolutely.
Yeah.
Absolutely. And thank you very much for having me. This has been a really, really enjoyable chat.
Thank you.